A1 Trading to Tower, you are clear for takeoff. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
All right, everybody. Good morning. Welcome back to another live stream, last live stream of the week here, guys. We have U.S. holiday coming up Thursday and Friday. We have Thanksgiving holiday here in the United States. We are going to also see in this same time window, usually a little bit less, well, a lot less trading volume. Hold on one second, guys. I got to let my cat out the door. She's screaming. Okay, sorry about that. So anyways, yes, Thanksgiving week is this week. So Thursday, Friday, we'll see some quieter activity in markets. Things will probably, I think, I need to double check this, but we have a half day on Friday, I believe. And then today we will see what happens. I was doing some research. We've talked about this many times on the channel. But I wanted to go over a little bit more about this seasonality stuff during the week of Thanksgiving. So specifically, during this week, the Thanksgiving holiday week has an average percentage gain in the S&P 500 of 0.75%, which over many years, and I don't know exactly what date time frame that is. This isn't our 10-year performance. I was researching this online and I found this number. The point is, it has a significantly higher than usual average weekly return during the week of Thanksgiving. I saw a range of reasons people acclaim that this is the reason why Thanksgiving week is strong. Some people say, people just are feeling jolly. They're on vacation. They're spending money. Other people point to the idea that during this time of year, there's a lot of online shopping that goes on. E-commerce goes crazy because you've got the holidays and special deals that are coming up. Hint, hint, by the way, pick up a copy of Edge Finder. But it's on Black Friday sale as well. But the point is, there's like a lot of spending. A lot of people are hanging out, spending time together. People feel good, lower volume in markets, less kind of worries in terms of the market. Kind of everyone steps away from the desk a little bit. So it does not guarantee that like today, tomorrow, Friday, everything is just going to be straight up green for markets. But what it is suggesting is, historically speaking, this is a time where the market outperforms more than usual. It goes up more than usual. That's all the stat is telling you. We also see that obviously in our data as well. The full year seasonality shows that this whole period of time, part of the reason, so far, it's been kind of rocky in November, but October, November, December, that play card that we've talked about here on the channel has so far, I don't want to jinx it, but so far it's been pretty excellent. It's not been so good for Bitcoin. I don't know if you guys have, I've also, to call out where I was wrong on this, I figured, hey, Bitcoin might have a strong end of year. Not at all. I took 2 losing trades on Bitcoin. I haven't touched it since. I don't have, I tried to get long Bitcoin. It fell. I stopped out for a loss. Then I got long again when I thought it was going to potentially, bottom at the 50-week moving average or the 20-week moving average. It did not. And so we kept going. So I stopped out of that one. So Bitcoin, I've been very wrong on. But somebody in our group said, Nick, it seems like your Bitcoin trades are just off. And I'm like, that's a fair, response to me having 2 losses. But Bitcoin over the years has been one of my best things to trade. I had some really good trades on Bitcoin in the past that played a big role in helping, even in 2020, I think 2025, but I know in 2024, I had some really good trades right towards the end of the year on Bitcoin. So everything kind of ebbs and flows. Sometimes you get it right. Sometimes you get it wrong. You can't overvalue your, your strategy on, or over or undervalue your strategy on a very finite number of trades. We talk about that often on the channel. So for now, my thought process is Bitcoin seems to be broken this year. I'm not sure exactly what's going on with Bitcoin. I wouldn't be surprised if you did get some sort of a bounce, though, in response to potentially some risk on flow that we've recently seen in the Nasdaq. You've got a little bit of going on, right? Take a look at the Nasdaq. Nasdaq, it looks excellent. You have gold ripping here. We're looking good on gold. But Bitcoin just, man, something's broken about Bitcoin. I don't know what's going on. Bitcoin hodlers, what's the what's the word? What's going on here? You've got Ethereum trending lower, Solana is trending lower. I mean, it's just ugly out there for the crypto crowd. I mean, and it's a slap in the face, especially when the Nasdaq starts rising and Bitcoin doesn't get the same kind of love, because the whole idea, at least my understanding of it in recent times from a trading perspective, Bitcoin might as well just be a leveraged tech stock, right? It trades very in sync with tech stocks until recently. That correlation seems to have broken down a little bit. So the question is it Bitcoin having an idiosyncratic move, as they say? It's a very jargony finance bro word, but is it having kind of a move that's like separated from the pack here? Or is this telling us that there is something more worrisome in markets going on? A lot of people will point to the Japanese treasury bond yield rising as a source of concern. Basically, the carry trade unwind concerns coming back into the picture. If you have higher borrowing costs in Japan, it does put some pressure on people who are short the yen via borrowing from the Bank of Japan and lending it out to other places, buying bonds in the US, buying bonds internationally to collect that arbitrage yield from the carry trade. If that unwinds, if it goes the other way, one of the first places people are going to probably pull money out of is the high speculative, highly pseudo leveraged movements of Bitcoin. So I think that might be a fair say of what's going on with crypto. That's my educated guess. But yeah, we will see. We will see what happens with Bitcoin. I've mentioned that I use it primarily as a trading vehicle, and I would like it a lot more if we actually saw some constructive price action. But right now, it's just in the gutter, man. It's just not. It's not having a response that looks solid. Now, again, I'm hopeful. I'm hopeful that you do get this kind of Hulk candle that starts to send us into an up wave, and we rally back. I would love to see that. In fact, I'd probably start trading it with you. But at this point, I just don't have a reason to take any momentum trades when it comes to Bitcoin. I love the Nasdaq move that we're seeing. It looks very, very good. With nice little response to this 100-day moving average, as well as our support level that we've been talking about. Edgefinder continues to get a strong reading on Nasdaq, +5 reading. We did lose a little bit of score. Retail sales numbers were a little bit soft, so we lost a little bit of our economic data score, but still in positive territory. Gold getting a nice read as well. That retail sales number being weak yesterday for the US actually gave a slight bump to the score in gold. Same with silver. Silver looking okay. Russell looking good. Look, I think interest rate cuts are coming. I like the Russell idea. If we can get some setups going on in there, let's just pull up. You guys know I love trading the Russell. If you've watched me for a while, it's one of my favorite things to trade, actually. We had a nice sell-off, actually faked out underneath the 100-day moving average, but we've recaptured all of our moving averages, believe it or not, for the Russell. Very impressive rebound, very sharp rebound here recently. The Russell, coming out of this recent price action, you've had a very sharp reaction in the Russell. That's an almost 8% up move. It's pretty impressive very quickly. Dow Jones also had a nice reaction. S&P 500 had a nice reaction. Nasdaq, believe it or not, in terms of its retracement of its losses, is actually kind of lagging in a way, right? It's compared to like the Russell, which has regained what, 618% retracement. Yeah, it's recaptured all of its fib levels. Excuse me. It's looking pretty constructive here. So I like the Russell. I think it looks very strong within the pack. Really nice move yesterday too, and following through on this. When it comes to precious metals and the dollar, let's talk a little bit about that. Dollar's pulling back here a little bit off the 100. I still don't have a huge bias on the dollar. Let's take a look at major currencies. We do have Aussie dollar getting a bullish rating, and yesterday's retail sales numbers just put me back in neutral camp for dollar. So I don't really have a strong reading there. If I take a look at metals, silver, copper, and gold all getting bullish readings. That looks excellent. So gold, I'm still long gold. I've got a stop loss below this recent structure low. I do like that we are back above all four moving averages, the 20, 50, 100, and 200 looking really solid. I bought this. I went long gold after the retest of this 20 period moving average seems to have held. We recaptured it, and I decided to get long, put a stop below structure, and we look constructive from here. So my plan for gold, it's pretty slow. It's not a huge position in my account. I'm looking for us to at least recapture this area. If we can get above that level, I'll start looking for opportunities to trail stops at any sort of higher low, still targeting ultimately a move to the previous high and beyond. So I'm looking to see if we can have another drift higher in precious metals. We're off to a really good start. The trade's floating just under a 1-to-1 currently for me, and we will see what's coming next. Silver's up 2% today. Silver looks excellent. Silver also retesting moving averages, coming back in. I mean, just look at that. It's beautiful. 20-day moving average. I like the reaction here to this past level of support. Looking here for, again, another breakthrough highs would look excellent. Really solid. We have unemployment claims coming out in the next few minutes here, guys. That should be interesting to see if it makes any sort of movement in the markets. If it is surprising enough, it very likely will. Unemployment claims are big because, of course, if you're talking about the labor market, we don't really have much more information currently before the Federal Reserve makes its next decision on December 10th. From now until then, we don't have a ton of labor statistics. We won't get another NFP report. I know, people who are just tuning in, if you haven't caught up to steam on all the to speed up on all the labor Bureau of Labor Statistics stuff. Basically, we are not going to get an NFP report this coming Friday or December, the first Friday of December. We're not going to get an NFP report. They have postponed it to December 16th, which is after the Fed meeting. So we are kind of operating with what we've got to work with. Fed seems like they're going to cut. Fed officials, Fed presidents coming out, sounding pretty dovish. So we're probably going to get some rate cuts. We have 1 minute to go here, though, guys, and this is going to be pretty big. Unemployment claims today coming expected to be 226,000. We'll see if this causes any volatility. If you get a surprise in this number, it very well could cause some volatility. Don't go anywhere after the number, because what we'll do is we'll actually explain what it means, talk about how it could impact charts for the rest of this week. Unemployment claims, very important to keep an eye on. We don't want to see big spikes, because big spikes, you're definitely getting rate cuts, but it could also signal some worsening problems in the labor market. So we've got this coming in here in about 30 seconds. By the way, if you enjoy my streams, we're here Monday through Friday. Some of you guys might be tuning in for the first time. Hit that subscribe button, hit the thumbs up button, and consider also hitting the notification bell. It might be easier for you to stay up to date with what we're doing here each day. It'll also notify you when we go live. We got about 15 seconds here. There you go. Hit that like button. Support the stream. Thank you very much. How about updates on the COT report? Yes, we will. We'll talk about that. Just a moment here. So unemployment claims data should be dropping any second now. See if it gives us anything to work with today. Okay, an initial reaction We're about 15 seconds in. Nothing big. Let's see if we have the number. All right, so core durable goods came in a little bit better than expected. Very nice. Just waiting for that unemployment claims data. Forecast for 226K. Last one was 220K. There it is, 216, better than expected. Okay, so could be a little bit strong for the dollar, but nothing huge, and at least in response to this, it was a better than expected print. Unemployment claims, if you're a dollar bear, you want this number to be higher than expected, showing some weakness in the labor market, more rate cuts coming. And if you're a dollar bull, you want this number to be low, less people filing unemployment claims, shows the labor market is, you may not be having those sharp rise in layoffs. That's really what we're keeping an eye on. So I'd say this passes the vibe check here for today. Also, just real quick in the chat, I see a couple people saying hello. I know I had a million things to get through just to get us up to unemployment claims. Good morning to everybody. I hope everyone's doing well. Got some really nice comments in the chat. Thanks, Kyle. You're the best. You're the best too, Kyle. Thank you very much for the support. Good morning. Good morning. Thank you for being here. And thanks, Nick. Going to get Edgefinder and VIP signals this week. Very excited. Man, I'm excited. That's awesome. Come join the crew. We'd love to have you. Just real quick, we are doing our Black Friday sale this week. If you don't have access to Edgefinder, it's the tool that I use in all my videos to scan markets. Look, if you take this stuff seriously, get a copy of Edgefinder. It's on the lowest. We're doing the lowest price that we do all year long right now for our Black Friday discount. I want you to have it. I want more people using the tool. Like it's been my my career-defining project is to build and maintain Edgefinder with our team here at A1 Trading. We work all the time on improving this tool constantly to make it the best it can possibly be. If you are somebody who sees yourself as an aspiring or already a macro/sentiment trader, if you like tracking institutions, if you like tracking crowd sentiment, if you like tracking the macro, specifically like GDP growth, inflation statistics, get yourself Edgefinder. The reason I built Edgefinder is because I am a macro and sentiment trader. Like those are my things, right? Those are the things that I really look for to help build trade plans. So years ago, I was like, okay, I don't have an all-in-one out-of-the-box tool that helps me actually keep an eye on that stuff. I have a background in software engineering, so I got to work and I was like, you know what, I want that tool so bad, I'm going to build it for myself. And I started building Edgefinder. I mean, this was 2021. I started building it, mapping it out, and then hired some help to really take it to the next level. And it has just gone from there, because what happened is I started sharing it in my videos and people were like, I want that. And I was like, oh, this could be a sellable product. And that was the greatest thing that ever happened to Edgefinder is we started selling it. Let me tell you why. When people buy Edgefinder, I spend more money on Edgefinder. Every time people, when we have more budget coming in to work with, I find new projects to fund and to build, and I raise the stakes, because again, if you buy Edgefinder, you get it you pay once, you don't pay monthly, you don't pay yearly. It's not a subscription. It's not quarterly. You're not paying us every month. You get Edgefinder once, it's yours. The best part about that, in the future, if you are and help me out, if you're an Edgefinder user, has the Edgefinder changed while you've had it? The answer is probably yes, because we have constantly added new features. Every time we have, a sale event where a bunch of people buy Edgefinder, a huge portion of the budget that comes in goes directly into funding more projects to improve the software further. So if you've owned Edgefinder for a couple years, let us know in the chat. Has it changed under your watch? Because it certainly has changed in the last few years. It's only getting better. We're funding more and more projects. This thing is going to the absolute moon in 2026. And right now is your biggest opportunity of the year to get the lowest prices for people who are watching the stream right now. Black Friday is live. Get 45% off the Edgefinder. Here's how. Click the link in the chat right there, or scan the QR code below my camera, and you can speak directly to a member of our support staff who is standing by. We have real people on the team that help out traders all day long, customers who are interested in Edgefinder, who have questions about it. send us a message. Do not miss the chance. It's the best price of the year. The tool's only getting better. We are raising prices in 2026. And it's again, it's a game changer for people who are aspiring macro and sentiment traders. Grab it. It's worth every penny, I'm telling you. With that said, we're going to bring in my good friend, Chris Pulver, to take a look at today's market action. And we can just bring him in, say hello. Whenever producer gets to that, we'll get that sorted out. So we'll see Chris in just a second. Dollar index. What's up, Chris?
Good morning.
How's it going?
Good, man. Happy day before Thanksgiving.
Yes. Chris, I was reading this morning that the average weekly performance of the S&P 500 during the week of Thanksgiving is 0.75%. I've seen so many different reasons as to why people or the claims of why that is. Why do you think it is? Why do you think this week has such a magic to it? Is it just everybody's, kind of got a food coma and they're feeling good and they just buy the stock market?
No, I think that the feeling good comes before the food coma. I think in order to enjoy that food coma, enjoy the Thanksgiving football and hang out with family and friends, it'd be nice to know that the market's up 1.91% for the week, considering we had one of the single biggest day reversals ever in the history of the market last Thursday.
Yeah, and probably, this is the thing, right? Is like people who are new to trading, that kind of day is like a wipeout day for a lot of people. Like those kinds of days, if you're a leveraged trader, if you're getting into this stuff, I know a lot of people just anecdotally off the top of my head, they get into options. And Chris, this is just a side note. Every time I meet someone in the real world who says they trade options, I just know what they mean immediately without them saying it, is that they're buying calls, buying puts. I never met someone on the street who's like, oh, I sell options. And it's like everybody just gets into it. They just want to buy options. Isn't that interesting?
Yeah. Unfortunately, there's a lot to learn. If that's how you get by, is just, I buy options. It's like, if you say I trade options, then that means a whole gamut of things. So right. I trade options.
Right.
There's a lot that can define.
Yeah, exactly.
Nick, let me ask you something. I think we talked about this yesterday, but I want to throw a couple scenarios out there again. Do you think that this low, now we still have today's trading, futures are up about 0.3%. It looks like we are going to get enough of a move above the NVIDIA candle sell-off last week. Question is, do we stay there? I think a key level to watch today. Chris, this is how dare you? I'm a vertical spreads master. Good for you, man.
Nothing wrong with buying options. Just be careful doing it, is all I'm saying.
Just know what happens. Like it's just knowing, like when you put a trade in the market with options, it's like you need to know the outcome. You need to know the reward to risk. It's like just play the game, man. There's a lot of dynamics that go into options. Okay. If we stay above 67.35, that's good today. That's positive gamma. I think it'd be a big disappointment to see the market turn, right at this top from Thursday last week and start to head back down to that. Even that is a like positive negative gamma pivot level. But if we just drift higher, I'm looking at some intraday gamma at like 68 to 68.25. That is a pretty impressive recovery. I'm just going to throw it out there. I don't love what this means for next week. I feel like having just a 3-day march to highs again, maybe it's positive gamma, but next week we are officially in December, right? Like next week, December is 5th. What, 1st through the 5th?
Yep.
Yeah. So first week of December, big
Cyber
Fed.
Monday.
Yeah, big Fed. We'll have some jobs numbers. I don't know if we're gonna have CPI or not. Let me see what Trueflation is doing really quickly. I'm just thinking like what could be the derailment? Anything that would derail the market. Trueflation index is coming down a little bit, which is nice. Coming down from a 2.7 to 2.3. That's encouraging. Anyway, long story short, this is the all-time high in the top blue line. This is the NVIDIA sell-off high. This is the NVIDIA sell-off low. It's open space above 675 SPY. Open space to retest the highs around 690. Highs in SPX 69.23, I believe. But we have to hold. It's that simple, man. If we're going to drift up, we've got to hold. If we turn next week, then I put us right back in the indecision camp for right now. But is this a head and shoulders? That was a long way to say that's my question for you. Is this a head and shoulders?
Yeah, and Chris, I'll show you just real quick my same chart on this. I put
Okay.
this in the Telegram yesterday, exact same concept as you've got. So, I mean, this is I called it the decision line because again, it's that 618% retracement from the highs on the SPX. So if to your point, if this is some sort of head and shoulders kind of concept, that would be it, right? I mean, I called it kind of like the line in the sand for the bears right here, is that if you're gonna get some kind of reaction from this market, especially given a low volume, seasonally strong week, I totally agree with you. For the bulls, they got to hold this. For the bears, they got to hold this. It's really the decision line so far. Starting out today, you got a little positive, little green. I've, over the last few years, it's been hard to remember. I can't remember a Thanksgiving week that was very disappointing. Like, so maybe it is one of those things where it's like a drift up, and then, after everybody sobers up, they come back in on Monday and it's like, all right, where are we at here? And they, sell the market. I'm not too sure, but yeah, that is the spot. I would agree with you. So we'll see what happens today.
Yeah, I mean, futures is up. Let's see, S&P futures up 0.3%, Nasdaq futures up 0.46, Dow futures 0.21, Russell futures 0.07. The biggest story to me this week has been the complete reversion in VIX. I mean, we're down to 18 right now. That's a huge collapse, dude. Which again, I can't believe we're talking about this reversion in the VIX to 18 when we've been dealing with VIX at 13 to 15 for years, and it's been pretty amazing actually to think how aggressive or how consistently elevated the VIX has been. I mean, this would be kind of post Liberation Day was no joke. This is Liberation Day in April, and then we proceeded just to get down to sub 15 and stay there for a while. But having these two consistent spikes, it's like any other year. It's like you just take it in stride, you figure it out, and it's hard to draw a bunch of parallels and conclusions to what we're about to see in the next 60 days. I think, if the markets cling to highs, great. If the markets sell off, next week, or we can't hold this line in the sand, like you said, the indecision line, okay, fine. Obviously the big breakdown for bears would be if the bears can take out 65.20, 65.30, they take out those lows, then, the nice thing is you can measure this. You can measure high to low. Let's say that we have a little iffy day today, no trading tomorrow, limited trading on Friday, and then Monday is just back into indecision. We're watching this for the end of the year, but you can measure symmetry, dude. I mean, S&P would get down to 6,100, 6,000. That'd be a double-digit correction. I'd still think that'd be a spot for the bulls to be okay, cleanse over, correction done. Let's see if we're going to maintain a bull market.
Right. And I think, we talked about that yesterday, this concept of when it comes to this market pulling back, moving average wise, that 200-day moving average I mentioned would be a lot more attractive in terms of a longer term opportunity. Like if you're talking about buying, dipping my feet into buying stuff for the longer terms, companies that I like, etc. I like that a lot better. So we'll see if we get, something like that. I mean, eventually it will happen. The question is, are we going to kind of make a run for the highs here or not? Chris, I want to get your thoughts on something too. This market, I think that part of the reason that this, some of these recent moves have been so wonky is that you get this all of a sudden sentiment flare up of people, oh, the AI bubble. And then, that sentiment can be erased so quickly. I think that if you're talking about something that is more of a sustained downtrend that actually gets us 200-day moving average, but even perhaps breaks that, to me, it has to be something that is more fundamentally broken in the AI trade, or something that is, just straight up macro. Like, for example, rate hikes. We talked about that and these, you asked this earlier, you said you don't see exactly what that, black swan type of thing that really, the spooky thing could be. I think it would probably be something that, we're not expecting right now. For example, a sharp rise in oil prices, rate hikes, inflation really spiking, or perhaps some sort of blockbuster, Watergate moment within the AI trade. Like, for example, NVIDIA gets caught doing something with their numbers. I'm not saying they did. I'm just saying like some sort of thing we're not thinking of feels like it would be the bigger catalyst that, knocks the market off balance. But right now it's like, to me, I don't think it's going to be a CPI number coming in a little slightly higher than expected, or unemployment rate going from 4.4 to 4.5. Like, I think it's going to be something that is more external and truly shocks this market. But the other thing that I would say is that if it's really an AI bubble, sentiment's just not there. We've talked about that many times, but you don't have massive surges in IPOs like you did in 2021 and in 2000. You don't have, massive debt spending. You are seeing that on the rise, but you also have sentiment in terms of stock market sentiment. There's a lot of bears out there. So I don't know. I think a healthy correction within this market is one thing, but I think calling for like the end of this bull market completely is just a difficult task.
Yeah. I mean, give this market 5 more years, we're probably at 10,000 SPX.
Yeah.
It's like, but that probably comes with another 20% correction or more.
Probably, yes.
I mean, I think the bottom line is the US cannot afford to let this market really crush. Like, if the wealth effect is crushed, it will hurt everybody.
Yes.
Like, so, sometimes you think like, oh, the economy can drag the market into a recession. Well, we're at a place where these valuations are so high and the perfection is so needed that the stock market needs to stabilize and stay this way and stay up and stay positively drifted in order to make sure that our economy is running smoothly, because so much is hinged on its performance.
That's a great point. It's almost like the stock market can bring us into a recession, because the last leg to fall, or in terms of the consumer right now, it feels like, is the wealthy consumer who has a bunch of stocks.
Yep. And who is doing majority of the spending. For example, you've got McDonald's CEO saying that they're losing demographics of people that can't afford to spend money at McDonald's anymore. You have people at Walmart saying that they're getting wealthier clients or wealthier customers that are now shopping at Walmart. You also have, high-end fashion brands that are doing well. Like, so it is screaming K-shaped economy. Did you see, I don't know if I mentioned it in a message with you, but Michael Green wrote this big piece. He's on Twitter as Professor Plum. He's pretty depressing to listen to, because it's just like he acknowledges like all these flows are just like the mindless robot of, if you have a 401k, you're participating, 60+% of households, you're participating. Like, nothing stops this mindless robot until something fundamentally changes with like the liquidity flows and forced buying in this market. Yeah. And most of that goes to, the ETF production and by Wall Street has been just like the perfect way to take in all this money, say that you're a diversified ETF, but really you're still Mag 7 exposed.
Just Mag 7.
It's like Mag 7 is weighted so heavily in most of these ETFs that anything you're buying is going to be exposed to that in some degree. If you're buying the SPY, heavy Mag 7 exposure. You're buying individual sectors, tech sector especially, consumer or communication services. But it's all Mag 7. So
here's something for you to chew on, Chris, in combination with that. I was asking, I talk to Grok AI on the way home a lot of times, because it's just like, I'll ask it questions. It's so fascinating. I think every trader, by the way, get yourself AI. If it's $10 a month, $15, and start talking to it and ask it trading questions. Oh my gosh, it is game changing. I've been doing this for 10 years and I'm learning stuff every day about the markets. It's fascinating.
It's cool.
Anyways, to your exact point, I was asking Grok to do some research for me in terms of, historically speaking, has it been a winning strategy to buy just the top 10 stocks and rebalance every quarter? I asked it like, hey, if I just bought the 10 biggest companies in the S&P 500 and rebalanced them equally so that each one has an equal, 10% of the portfolio, and I did that going back, 20 years or whatever, would I have significantly outperformed? And interestingly, it gave me a really good answer. It said, yes, you definitely would have. Like, especially in recent years, the big companies, the biggest of the big, have significantly outperformed. However, there is a caveat. I asked it then, well, what about a risk-adjusted return basis? And of course, the caveat here is that Grok essentially told me that by holding just the top 10 companies, the biggest companies, yes, you would have outperformed on an absolute basis, but on a drawdown perspective,
Oh, yeah.
historically speaking, when you have very high concentration, the drawdown in holding those companies, essentially when the big ones fall, the drawdown in the big ones was significantly worse. So
Do you
if
have a percentage? Like
I
how
don't
much
have it off
worse
the top of
was
my head.
the
I have
percentage?
to go grab it again, but it
Okay.
was just interesting. It was basically saying when you have high concentration, yes, you can outperform during the good period because those companies are rock star when the bull market is taking place. But in the bear market, you pay for it big through bigger drawdowns.
Yeah, super interesting. I'd like to find out that percentage. I feel like the average S&P is 8% with a risk adjusted return of, you get drawdowns of upwards of 13 to 15%. So that's your trade off. You want 8% a year, expect 15% pullbacks.
I want to say,
drawdowns.
but I also want to make sure anybody who's interested in this, go check this for yourself. I want to say it was like 10% average annual performance, go looking back as far as Grok could. And then it was like 13 to 14% with this.
Yeah,
You know,
which I would imagine that probably comes closer to like 20 to 25% pullbacks. I would think.
I would think so too. Yeah, I just said it was a significant bigger drawdown. I can't remember a percentage. That's
really interesting. I followed the top 25 for a while just to have a little bit more diversified. The Mag, look, and nothing against the Mag 7. I think, just to go back to your point of, we don't know what the outlier is. It's like, if you want to see what an outlier looks like, nobody thought COVID was going to be the reason the market crashed in 2020. Even though technically it set up with a bearish move, all it needed was a catalyst. I think there's probably nothing that we are talking about right now that technically would be the catalyst for the next 20% drop. You think it might be Trump. You think it might be the Fed. It might be in this AI web. It might be earnings compression. It might be some big, some more cockroaches coming out of private equity. You think that, but it's like, I have no idea. And like I said, frankly, the U.S. market can't afford to dip. It can't afford to go into recession. It can't afford a 20% correction unless it's going to be, my biggest concern, Nick, is that our next correction that is it's backstopped by the Fed, or it's backstopped by Trump, meaning like puts and narrative, everything changes to try to pivot this thing and get another V bottom, is that we throw trillions of dollars at it again. We open up the floodgates of liquidity again, and we maybe stave it off one more time. But, it was a $700 billion bailout to save the world in 2008. It was a $6 trillion bailout in 2020. The next big bailout is like potentially tens of trillions of dollars globally. And I just don't think that can go on forever. And I know it's funny money, but it's like, you talk about debasing, it just takes so much more money to get any type of additional gain and leverage. I mean, we are literally operating like every dollar that the US has to spend. It's like, I think US has to spend close to $1.50 to $2 just to get like a half a point to a point worth of movement, like GDP wise. So it's a super leveraged system. And this doesn't come as a surprise to anybody, but it's just, I don't think we know what the catalyst is. It's exhausting trying to be a perma bear. It really is. I mean, I can't think of a perma bear that's actually enjoying this year. And like, I think this might go down as one of the most hated rallies from lows to highs. And now everyone is trying to think like, oh, this is it. This is as far as it can go. You have no idea. There's no like AI, the .com bubble, the Nasdaq was up 100+% in a single year.
I mean, if we're learning from history, Chris, it was like, and I know you know this very well, but for many listeners, in the .com days, many very intelligent investors blew up trying to short the
Druckenmiller.
And they were right. They were right in the
Legend.
sense that there was underlying problems,
Yep.
but they were early. And again, we talked about this yesterday. In markets, they are very unforgiving about timing. You cannot be early and right necessarily, unless you pull a Michael Burry and you're willing to accept very steep drawdowns. And look, that is the one that got away, kind of, to be honest, in my personal opinion. I think he's a very smart man, much smarter than I am. He has a huge following, but he's been very bearish for a very long time. So has he also been just as smart during these last 20 years?
50 of the last 2 crashes.
Right. I mean, it's like you can kind of cherry pick, but I would agree with you in terms of most hated rally. I've never seen a rally more hated. And I think a part of it, understandably, a lot of people don't like Trump. That's perfectly fine. I think that plays a role, but I think also what plays a role is that you've had little to no pullbacks. You've had, this concept of AI, which is very kind of foreign to a lot of people. It's this, how are we going to get a return on investment? It's a lot of speculation. It's a lot of hope that there's going to be a big ROI, and that draws people who are skeptical or cautious to start to hate the rally, because it's like,
you get resentful. I mean,
yeah, you're like, what the heck
you're
is
not
that?
participating.
You
You're
guys
not
are
getting this
just-
rally, or your life is more expensive day to day, week to week, month to month. It's like, how am I not, all in stocks and generating these crazy returns? It's like,
I think you
the
throw
market is
in
not killing it
the-
this year. Like individual stocks have killed it.
Yeah, I think you throw in the political discourse that is very divisive in the world right now. You throw in, we have geopolitical events. You throw in the market has little to no pullbacks and just goes straight up. Skepticism around AI is a logical response to a brand new technology. You have the K-shaped economy. There's no question why this market is hated. There's a lot of people who are not participating. And so, look, we've been trading through this environment. It's been an interesting year. You had a big surge in the VIX and then mostly a low vol year outside of that. It's been a really interesting year. And again, most hated rally, the question is, do we see that turn into a chase where the bears kind of, chase the baton and they say, fine, I'm throwing in the towel. And does that lead us into final bubble territory? That would be, my question is, okay, if we're going to talk about truly seeing the top of a bubble, bubbles don't usually happen when everybody's calling it a bubble, right? They usually happen when
your
everybody's
chart
confident.
exactly. Yeah, we'll have another. I don't know if we're gonna have another print today for AAII. Maybe we do. The hated rally. I get it. Like I get the frustration. But we will have the clues. I mean, the reality is, I don't think we have an exogenous shock to the market that all of a sudden we're down 20-30%. And somebody actually messaged me yesterday asking me about some of the alerts I've done with the pulver alerts, and like, oh, Chris, you're going a little bit longer than you usually do. And my response was, these are assets that I would gladly own. I think I'm trying to look. I did a couple trades this week. I did one on Google, I did one on Costco, and I did a couple on the S&P. So the SPY and the QQQ. I will tell you from these, SPY, I'm willing to own it 44.8% lower than current price. It'd be like a 46% from all-time highs, 44.5% lower. I'd be taking ownership around 380-ish, 371 to be my break-even price if I own the SPY. And I collected $4 income there. Google, it wasn't a big credit. I pulled in $1.70. Would I own Google at 138.35 when this thing's ripping to all-time highs? Absolutely, I would. Costco, a $900 stock, I'd own it at 415, 61% lower than all-time highs. Would I own that? Absolutely, I would. Nasdaq, would I own it 50+% off of all-time highs? Absolutely, I would. So I don't mind going out 6 to 12 months to get those trades, because if I'm going to have ownership, price has to come to me. I'm not going to chase price at these all-time highs.
Right.
So that's what I'm doing. It's like right now, I don't mind going out 6 to 12 months. I know that's a horizon that most people are uncertain of. I'm not certain of it. I'm just saying, probabilistically, when I've got 98 to 99% probabilities based on a VIX at 20 plus and I'm selling premium, the odds of us staying at 20 and going higher through the next 6 to 12 months is pretty slim. Usually the VIX is a natural reverting instrument. So if it spikes up and flares up to 29 like it did, during Thursday's sell-off, it's now 18. So we just don't have a path of VIX where it just stays higher, 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 higher. We can have a flash of 40, 50, 60 VIX like we had back in 2018 and 2019. That's a volatility event. But it's almost like we've learned from those days, Nick. It's almost like that October 10th candle and the November 20th candle were just also the ways the markets can cleanse the volatility that it needs, because everybody loaded up on puts on Thursday. And then you come into Friday and the market's up. You come into Monday, the market's up again. Come into yesterday, it's like everyone that was long puts initially is just seeing huge losses already. So
it's amazing. I mean, that has been, for me personally, Chris, in terms of timing in the last few months, I've had a lot of success buying those horrendous days. I mean, every single one of these.
Sure.
Now, not every single time has it been painless, no issues. I mean, there were times I bought, let me think. I bought this move. I held it all the way through here and got trailed out. And then I bought again when it came back, and I think I took a loss on this one. And then I bought this one, and this one's working out. But pretty much all of my triggers, timing wise, we're now start number one. I still am a fan of the macro. I think that sentiment is really bearish, but then those surges in bearish put volume, that has been short term a really nice indicator in recent months, because you're in a bull market. It works in a bull market, right? And I think that for now, until we start to lose those longer term moving averages. Look, I love the idea of a deeper pullback, and some part of me hopes I can kind of catch this trade, get out of it, and then I do hope that we go lower. I made a post recently. I always wake up kind of hoping the market's lower because I can buy stocks at lower prices because I've got a long time horizon, and I think everyone should think that way. If you have a long time horizon, right?
Because how we go lower is never fun. It's never pleasant. There's always something. It's always the brink. It's always the house of cards is falling apart. Yes. So it's never fun how it goes down. I do think one more thing on the sentiment side. Part of me, I do wonder. It's like the University of Michigan sentiment being like one of the lowest levels ever. Usually that is one of the most reliable contrarian indicators for the market just to go higher when sentiment is extremely bearish. I do wonder if this market's goal is to just exhaust that crowd and put them into so much pain where it's like your bearishness has now cost you X amount of gains in the stock market, and it just finally has to break them. Like you can't be 43% bearish, 49% bearish, 46% bearish. Like if that dips down to like, let's say the bulls climb up into the high 40s again and the bears dip down into the low 20s, then I'm more skeptical. And I think that, okay, now people have clearly thrown in the towel on being bearish, and then I'll, be a contrarian again. But it's just weird that I think we talked about this last week, is I think the market could reward both sides of the trade. That Thursday sell-off could be the rewarding for that very short-term sell-off. It could be rewarding the instant bears, but now it's right back up. And I mean, you buy. By the way, did you buy at the close of that Thursday candle, or did you just like take a stab on Friday or Monday? I'm just curious when you got in.
On the Nasdaq, I went long, and it was like right around here. Actually, I believe I came very close to stopping out right there. Okay. So I bought it and held it over the weekend, which again carries risk, because there was one time
we could have gapped lower.
You remember that August 5th, that day sucked for me because I bought that Friday, and then I had no opportunity to get out.
You're down like what, 4 or 5%? Sunday night futures came out. We were down like 4 to 5%. Gap lower on Monday. That was a nasty day for sure.
Yep.
It was the bottom, but man,
Chris and I, we came on and we our faces were a little somber that day. Put it that way. August 5th, 2024. You had a nasty drop down in the futures opening up, and I was long. I believe I was long a bunch of stuff. And it stung. It really set me back on a lot of my gains for the year. Ended up recovering okay, because that actually was the low, believe it or not.
Yeah.
But that's what markets do, man. They love to play gotcha. They love to play FU. But there's that candle, right? There's that huge, just nasty drop intraday, and that was the bottom before it just rallied for the rest of the year.
Yeah, and that was I mean, that was the Nikkei down 27% in 2 or 3 weeks. That was one of the biggest flushes we had seen, like in 3 or 4 trading days. I think the market's going to continue to surprise us with new record outlier type moves, and that is scary. Like the candle on Thursday was the 3rd time in history that we've had a 1.5% gap up, and then intraday sell off of over 3% to finish 1.5% close. Yep, that is huge. So that day on August 5th, like that was, fastest decline in the Nikkei ever in the history of the market. That also, the Nikkei came from like a 30+ year drawdown to get back into positive territory. And then right after that's like the Japanese yen carry trade is going to unwind. Maybe it is at some point, but if you look at the currency charts, I don't see the yen right now giving any sign. Dude, Japanese yen, dollar yen is at 158. It's overbought again on the technicals on the daily time frame. It's just not a currency pair that I can truly trust. If you look at the, Swiss yen, I love the Swiss yen. I think that's maybe one of the cleaner trades. I just saw a chart the other day that, Japanese yields are rallying, Chinese yields are falling. And so do people start borrowing in like Chinese yuan in order to arbitrage like they did with the Japanese yen? Since yields are up, they're going to borrow in something else. I have no idea. But, Swiss yen, it's like, I still like the technicals of this trade. I just don't have the confirmation to execute it yet. We have not broken any major structure. The Japanese yen is still like one of the most it's either you're right or wrong. It's that simple. You're either right and you can make thousands and thousands of pips on the Japanese yen basket, or it is a trade. It is a currency that will trade like a stock, and it will surprise you with how like inefficient and how irrational it can be for thousands of pips that I promise you don't want to fight. I've done it a couple times.
It's no fun.
It's you'll sit in like a 9-month drawdown wondering like, what am I doing? I'm being so dumb right now.
Yen is a crazy trade. Chris, we're out of time. I know you got to get going too. Have a nice Thanksgiving, by the way. Thanks, you guys too. Thanks for everything. We'll see you on the next one. Enjoy it. Watch the football. Don't eat too much, man. Your physique, man. You look great. You don't want to mess that up. Anyways, thanks for tuning in. And guys, up next we've got Marco taking over the stream. He'll be on right after this. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment. Hope everyone is doing well. So let me adjust this a little bit. I do want to comment. I was reading the comments and Max said that money flow to indices, gold doesn't necessarily mean DXY down. And that is right on the dot. So the narrative with the DXY, with the rise of the DXY, changed throughout this push. So from the 17th of September, up until now, we had quite a lot of narratives, and sometimes it was equities are up, so dollar is pumping. Sometimes it was equities are down, so the dollar is pumping. No one really knows why it's going up. I mean, it's not really connected with the equities market. There are some other more powerful forces in play. So money flows are important to understand, but they don't always work. So if you look at the S&P, you can see that the crash was in October. So this big crash and then pump to the upside and then another pullback. Well, during this time, people were saying the DXY is up because the S&P is down. Then during this time, they were saying the DXY is up because the S&P is pumping. So it's attracting capital to the United States, to the stock market, to the US dollar. So yeah, my advice is be careful with these money flows because they don't work 100% of the time. They could be used as a confluence or to build a story, but they can also be pretty confusing at other times. Basically, welcome to today's live stream. This is the last one for this week because we have Thanksgiving. So happy Thanksgiving to all of you guys in the US. What has been happening in the markets? Well, if we look at the Forex Factory calendar, we got some data. Inflation in the US came in a bit softer than expected as far as I can tell, but I would say right on the dot if you look at the general summary of the PPI. So PPI, not an issue and nothing spectacular. Aussie CPI came in pretty much a lot higher than the forecast. So if you look at the Edge Finder, look at inflation CPI, and then Aussie, inflation is definitely crushing higher. So that should be pretty, just a second. So that should be pretty bullish for the Aussie, okay? So let's check out Aussie dollar. Has it pumped recently? Kind of. What's this? I'm not sure what this is. Why do I have it on? But anyway, I'm going to leave it for now. Aussie yen. A little bit higher, but I would say the reaction has not yet hit the markets massively because this inflation is going up pretty drastically. So the Central Bank of Australia is going to need to be more hawkish. More hawkish means a higher Aussie dollar. I did have a trade on GP Aussie, which is now, well, okay, it's not looking that bad because I got taken out and then we had this massive red candle. So I thought that I was just taken out before the massive drop. But so far, the reaction is not that bullish for the Aussie. So interesting stuff, interesting stuff. I also had a position on silver, and right now silver is pumping, if I'm not mistaken. So this is the one that that is pretty unfortunate because I got taken out just by a couple of points. But it is what it is, part of the game, part of the markets. We move on. Getting back to the Forex Factory calendar. Very interesting number or very interesting event happened for the New Zealand dollar. It was the RBNZ cash rate, RBNZ press conference. So what happened? Well, they made a rate cut, but it was a hawkish cut. And also the guy running RBNZ, this is his last meeting, and he's going to be replaced by Anna Bremen or something like that. So he's going to be replaced by Anna. I think the name is Anna. He didn't want to give any forward guidance because if he did give some forward guidance, then his successor would need to accomplish his goals. So he basically left a blank plate for his successor to implement whatever she wants or to have the future projections that she has imagined. How did the market react? Well, they took this event, this press conference, as a hawkish event, which means NZD goes up. And if you look at the NZD interest rate, New Zealand interest rate, you will notice that they have been on a massive path to cut interest rates. Okay, so they have been cutting rates quite aggressively from 5.5 to 2.25. That's very, very aggressive in terms of rate cuts. And now they will most likely pause. So they haven't signaled any future rate cuts. And the next meeting is going to be in February of 2026. So up until now, to February, there is a lot of room for the market to keep guessing what is going to happen. But in my opinion, NZD should go to the upside. It already pumped quite a lot. See? Quite a bullish reaction on the daily chart. Also, NZDJPY. Let's take a look. Quite a big candle. So yeah, if we can break out of these ranges, break out higher, then it's pretty much game on to consider some buy setups on the New Zealand dollar up until February 2026. Because in February 26, we will get new guidance. We'll get a new, let's say, head of RBNZ, and she's going to maybe have her own ideas. But I suppose she's going to be more hawkish than dovish because they have aggressively cut rates. It's tough for them to get more dovish. So it's tough to be more dovish than a 2.25% interest rate. If we browse through the data, how is New Zealand doing? Let's see, New Zealand. Okay, GDP is actually not looking so great, if I do say so myself. What about the unemployment? Unemployment is overall rising, so that is interesting. What about the inflation? Inflation is also going higher a bit. So I wouldn't say this is an awesome situation in New Zealand, but I think from looking at these trends, from looking at this data, I think they should be more hawkish. I mean, a 2.25% interest rate, that is very low. This inflation is definitely above target. The target rate is 2%. Inflation now is 3%. Another reason why we could see the New Zealand dollar appreciate, at least until the end of the year. Usually during winter, there's a massive influx of tourists going to New Zealand because it's warm weather. So all of the people that want to escape the cold weather and winter, they run to New Zealand and spend 1 to 3 months in New Zealand. They spend money. Tourism goes up. Basically, income from tourism goes up as well. There's an interesting graph that paints the income that New Zealand is getting from tourists. And December, January, and February, I believe, are the best months. So they make the most money. They have the biggest income in December, January, February. And guess what? That definitely gets reflected in the currency, because to pay for anything in New Zealand, you need what? You need New Zealand dollars. Okay. Let me see where I left off. Damn, that's a lot of comments. Let's see. Hello, Ballout. Hey, Sluggy. Stairs up, elevator down. Thoughts on GDP-CAD. Pound Swiss, roller coaster, maybe yen intervention. Is the GDP finally getting some upside momentum? GU not interested. GDP autumn budget was kind of hawkish. I saw the meeting whole lot was tax the rich. Let's see. It happened already. Yes, it did. Okay, I didn't closely follow it. Let me check the reaction. Okay, reaction was kind of bullish for the pound initially. Let's do GJ. I don't want to get too political, but I don't like that Keir Starmer guy. They call him Comrade Starmer, and he's basically a communist. So yeah, I really don't like the guy, and I don't like the pound right now. I'm pretty bearish on the UK. They're getting bad data. I'm gonna have to research this new autumn budget, but so far there seems to be a bullish reaction on the GBP. Sluggy says autumn budget was kind of hawkish. I saw the meeting whole lot was tax the rich. Okay, that is interesting. So I'll try to get some bullet points out of the meeting. Let's see. And pound Aussie, it pumped as well. So definite bullish reaction from the autumn budget. Definite bullish reaction from the meeting. Still in pound Aussie short though. Okay, well, good luck with that. I unfortunately got taken out of pound Aussie. Rich don't pay the tax. Absolutely. So the rich always find ways to avoid taxes. And the rich are the ones who finance politicians. So politicians create these loopholes for rich people to get around, to get out of paying taxes. That's how it has always been. That's just how the US politics works, and I think politics pretty much around the world. So the rich people control the politicians because politicians are broke and they need money for their campaigns. Once they do get elected, then they need to follow what the politicians are saying or what the rich people are saying. Reeves' plan looked good for the UK. Okay, maybe it looked good. Hey Joshua, what's up? Welcome to the stream. Sluggy is sick. Hope you feel better. My YouTube is working fine. I'm not gonna lie, pound Aussie shorts still look very attractive. Yeah, possibly. I think they do. I just don't want to get back in. So I don't want to get back into the market. I don't have that sort of conviction. To feel better, you must say DXY to 95 3 times in a row. So Ballout is still calling for the DXY to reach 95. So I have to congratulate you on your persistence, because you have been saying that for 2 or 3 months now, and we just cannot reach 95. So I'm wondering how much longer can you keep that up? But maybe we drop in December. Maybe this drops to 95, and then I'll have to eat my words. But it's pretty funny. And congrats on your persistence. Aussie CPI ticked up today. Yes, we covered that. Have a cigarette, you'll be all right. That's good advice. Okay, so gold. Hey, Tomate. Nice to see you're a part of A1's inventory. Yeah, I'm glad to be here, and I'm glad to be doing these streams. I have quite a lot of fun, if I'm being honest. Gold and silver, sure. Gold is interesting. We can have reaction to the new Fed chair, Venezuela crisis, and decision of courts. If Kevin Hassett becomes a Fed leader, I think 2% target can be raised to 3%. What's your take? Do we go intervention on the yen? No, we're not yet close to the intervention level last time that I checked on UJ. So essentially, we reached the intervention level and then we kind of pulled back. So I would say 159 to 161 is 162. That's the level where the BOJ will definitely start stirring up some stuff in the background, possibly doing an intervention. I don't think they are yet ready to do it. What could happen is they could do an intervention, drop the markets, but then the markets recover and go back to that level. That would be pretty funny. I would love to see that. But if you're in any longs, if you're buying or selling yen against another pair, be careful when UJ goes to these levels. Be careful because, and I would say right now you're still safe, maybe. Until we reach 159, I think you're okay. Until we break this high, I think you can keep holding your long. But if we break the high, that area is trouble. You don't want to get spiked like this. So you don't want to be in this massive bearish momentum, this massive bearish price action. Look what happened the last time that they did an intervention. Massive, massive sell-off. So be careful because it can get dangerous. And I do want to take this time to mention the sponsor of today's video. So if you guys are looking to get funded, expand your trading capital, make sure to check out DNA Funded. So it's a reliable prop firm. They are being ran by professionals. It's not just some kid in a basement. A big broker is behind DNA Funded. And with our discount code A1Live, A1 Live, you can get 25% off any challenge. Okay, so 25% off A1 Live. Get yourself a DNA funded challenge. I just passed a phase 1 challenge. This is it. So I passed it yesterday. This is the equity curve. Profit target hit, trading days hit, daily loss I didn't break, total loss I did not break. And now I'm on to the phase 2. This is basically only using ChatGPT trade signals. It's a challenge that I'm doing for my YouTube channel. So far, it has been pretty successful. So plan is to do phase 2. I have 2 trades running. Unfortunately, they are in a bit of a loss right now, or at least the euro dollar is in a bit of a loss. But the main aim is to get a payout. So if I can get a payout using only ChatGPT and trade signals from ChatGPT, that'll be a big win. So yeah, check it out. 25% off. A1 Live, DNA funded, great prop firm, great software execution. So they use TradeLocker, which is amazing. So TradeLocker, my favorite platform to execute positions by far. Getting back to the markets. Gold and silver, that is what you guys want to see. Gold and silver. I'm definitely bullish. So I'm definitely bullish on this market. I think it still looks pretty healthy. I think the fundamental narrative is still bullish on the metals market. Inflation is going up. Inflation is above target. So if we go to the CPI, we go to the US, inflation is definitely still a problem. And Trump's big beautiful bill is coming in 2026. It's going to be even more spending. The US government has reopened, which means even more spending. Inflation goes up. Investors buy gold, buy silver to protect themselves against inflation. Now, am I buying right here? No. I had a position in, which unfortunately got taken out. Now I'm being a bit more patient. I'm not that eager to jump back in on gold or on silver. Let's check out the top setups page as well. So gold, bullish. Okay, actually getting a bullish reading. Interesting. Silver, bullish as well. That's pretty nice. So that is good to see. Although I'm not yet looking to buy. Yeah, I'm not that keen on buying right now. What would I like to see? I'm just waiting it out a bit. So the fundamental story right now, I think, is bullish gold. But if I can get some sort of a confirmation or get a piece of news, or Trump will do something, or someone does something that gives me even more confidence to buy, then I'll get in. So yeah, I had an attempt. It worked out kind of okay. It was a profitable trade in the end, but I didn't manage to jump on the uptrend. As far as the Nasdaq goes, or the stock market, which I forgot to cover, looks like we are rejecting from the 2400 level with quite a lot of force. So massive bullish momentum, looks very good. Congrats to Nick, because I think he did catch a buy setup right on this low. So that was a great entry. But of course, he uses multiple sort of probes. He got in, I think, 2 or 3 times, and then his third attempt actually worked, and now he's running some profit. The most important thing about that approach is that you have limited risk and that you have a positive reward to risk at the end of the day. So even if you take 2 or 3 losses and then a trade works out, if it goes back to the all-time highs, your reward to risk can be massive. So you'll pay for the losses and then some. That's the cheat sheet. That is the blueprint of profitable traders. You take many probes, you take many attempts, you take small losses, and then you catch a winner. Then you ride the trend, and you manage to make a very high reward to risk. So I'm bullish on this. Let me see what the Edge Finder says. Nasdaq. Bullish as well right here. The COTs are a bit old, so these COTs are not the recent ones. I think this is from September, if I'm not mistaken. I'm waiting for new COTs for the most recent Commitment of Traders report. Seasonality is, of course, bullish. Santa rally, November and December, greatest months for the US stock market. We know what happens. Black Friday, Christmas, New Year's, people are buying a bunch of stuff. There's massive spending of money. So favorite months for companies are November and December, because that's when they make a lot more money compared to the other months. I am right here. Well, I'm not in a position, and I'm not looking to take a position right now. I maybe should take a stab at it, but I'm not 100% convinced. So still being a bit patient on the NAS, still being a bit patient on metals. I'm in USDCAD. So USDCAD is a position that is running. I have set a take profit. Take profit is set at 1.41380. What is the reason? Well, I believe in December we will actually get a rate cut. If you put things down on a piece of paper, if you look at all of the Fed members, you can see that most of them are dovish. Most of them are dovish around the December rate cut. So if we do get a rate cut, we do get future projections as well. I think they're going to be dovish. I think they're going to be dovish for 2026. And I think the dollar can lose some value on this news. I think we can pull back on the DXY, which means we pull back on USDCAD. So I want to get out possibly before that. I'm considering my options. I do know that a seasonality occurrence of the dollar is end of the month, you have corporate buying of dollars. Usually last week of the month, the dollar does go up in value. You can test it. It's very easy. You can even do it through ChatGPT or Grok, but it's an added edge. So I'm betting on a bit more upside on the dollar, especially in this last week. And hopefully we can hit my take profit and take me out of this position for a nice gain. So that would be about it for me. I think we covered most of the stuff. Thank you, Sluggy. Now we're on to phase 2. Marco, is DNA funded swing trader friendly? I think it is, because I'm a swing trader and I'm using it. Are you going to continue trading your 50K with ChatGPT? Yes, I will continue. The challenge plan is, or the game plan, the goal is to get a payout. Happy Thanksgiving. Happy Thanksgiving to you too, and to everyone that is celebrating. Kudos to ChatGPT for trade ideas and trade management. To Marco, thank you, Sluggy. So yeah, happy Thanksgiving. Thank you very much for watching. Don't go anywhere because James is right after me. I will see you next week, and good luck in the markets. So let's look at the dollar. Let's see if it actually goes up until the end of this month. Goodbye.
Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Hello, ladies and gentlemen. Happy Wednesday. Hope you're all well. Saw someone talk about pound dollar. So I think to talk about the UK, FTSE, sterling, etc., we must also mention that we had the budget in the UK today by Rachel Reeves. So I'll cover that briefly. I'm not going to spend the whole half an hour talking about that. But yeah, we'll go over that to start with. Obviously, Otherman already asking about that. Sluggy, hope you're well. Tatienda, hope you're well as well. So I don't have all of the information for the budget. I'm still putting together a report for my team. But I'll read out what I do have, basically just a summary. So again, we're not going to spend the whole half an hour talking about it because it's not that relevant, to be honest with you. And when I say not that relevant, obviously it's relevant, but I mean, it's not very impactful in terms of markets. So today's budget delivered a tax-heavy fiscal consolidation, a slightly deflationary near-term path, and lower medium-term growth outlook, according to the OBR. So the OBR, hold on, there was a bit of a mess up with the OBR actually this morning. They leaked it, or they published it way before they should have. So this is what the OBR is. You could think of it like the SEP that we get in the US. It's basically covering all of the economics, what's going on with the economy, and forward outlooks and that type of thing. Again, not going to go through all this, but if you want it, it's on Google. Search OBR UK budget November or something, you'll find it. So basically what we're looking at with the budget is essentially targeting lower class or working class families, or lower income families, I think is sort of the proper way of saying that, because it's a lot of things targeted towards them. For example, there was the 2-child limit on benefits that's been scrapped. Then there's extra taxes on things like luxury homes, which, you know, think of that what you will. Tax increases across the board. Things like buses and trains are expected to bring down inflation because they're reducing the prices, as far as I'm aware. There's lots of different things, but none of it is conducive to growth, in my opinion. So I've been looking at it this morning, keeping up with the stream and all of the headlines coming out and things. It's honestly not great. So again, it's just not conducive to growth. It's going to help inflation, maybe slightly, but again, not great. That's going to lead to Bank of England cuts. So the pound did see some upside this morning. So we can see here on the pound dollar chart, the sterling did express some strength. However, quickly about 50% of it has been reversed already, again, because it's just not super impactful for the markets. And in terms of longer term, the pound is relatively supported off the back of this, but it's not going to be enough to prevent any downside. So if there are future catalysts that come out that are negative for the UK, that will take priority over the budget. So the upside on the sterling is extremely capped, in my opinion. So if anything, it's going to be more sideways rather than a massive rally or a massive dump. Again, I don't have all of the information because I'm still working on it, but that's pretty much what it is. There isn't really anything further to discuss that's worthwhile the time or worth the time. Overall, pretty neutral in my opinion. Gilts remain vulnerable. What else have we got? The FTSE 100 was completely neutral off the back of it. We did see upside on the FTSE, but again, the actual impact from the budget itself is negligible. And the energy policy is unclear. Sentiment is still negative, however. So we're looking really at high tax, low growth, and a high debt economy, which still falls in line with what I was talking about on the 2026 forward outlook stream. I think it was last week we had that. Anyway, let's move forwards because that's all boring stuff. So Edgefinder, we do have the sterling or the pound still reading bearish. So pound Aussie, pound New Zealand, pound CAD, pound Swiss, and the FTSE 100 all getting bearish readings, which again falls in line with what we've been discussing over the past 1 to 2 weeks. So pound dollar, I'm not actually overly interested in right now. I think pound Aussie, pound CAD, pound Swiss are my ideal markets to be getting involved with. So I'm still short pound Swiss, building up a DCA position there. Pound Aussie did do what I expected it to do or wanted it to do, which is come and fill this gap and have a retracement back into the fib. I think we spoke about this yesterday. That's not the fib. There we go. So yeah, we did see this. I didn't take the position, obviously, because it was during the budget. Sorry, not during the budget, but we had the budget coming during this candle, so I didn't want to get too involved with the pound, especially because I'm already exposed to pound Swiss. However, the fact we did reject here, we saw no buying interest above this level. It looks like we're about to have the trend change with the moving averages. We came into the fib, we came into previous structure, all rejections. So overall, this looks like a really nice short opportunity to me. Probably not right now, because we do also have a US holiday tomorrow and Friday, I think, if I'm correct on that. But also the price action right now doesn't look overly convincing. So ideally, I would actually like a second touch on this level to look for something a little bit more like this. So pound assets across the board, I am quite bearish on. I think pound dollar could also be a nice short position. We did see jobless claims come out lower this morning, which was obviously supportive for the dollar. So yeah, that's that. Probably just noise. GDP recent data doesn't suggest strength. Yeah, exactly, Max. The pound, I mean, there's not really anything else to say, to be honest. The budget was very unimportant, to be perfectly honest with you. And yeah, the UK economy is still in the bin as far as I'm concerned. So the GDP short narrative didn't change. No, it's not. Am I in the UK? Yes, I am, unfortunately. Ball out. Hello, Nat Gas at 4.6. Fantastic ball out. I'm really happy to hear that for you. Hope you're still in the position. You made some money off it. Yeah, it's one of those positions I unfortunately ended up missing, but there you go. It is what it is. I was willing to accept that risk by not being aggressive on the market. So that's the result. James, which prop firms allow grid or DCA? I only ever tried DCA on one prop firm, which was I think it was Funded Next. It was a few months ago now, probably 6-7 months ago. So the rules might have changed. I don't think they're the only ones as well, but that's who I tried to do it with. The only thing with prop firms in DCA, which is where I got caught out, was the daily drawdown. So although they allow it, obviously DCA does. The whole intention of DCA is to have drawdown at some point. So as long as you manage the positions, which would have to be very small to avoid that daily drawdown, then you'll be fine. Prop firms don't allow it, generally speaking, yeah, but there are a few that do. In terms of grid and martingale, I think some do and some don't, because depending on how good you are at deploying those strategies, you can either make a lot of money or you can blow up very quickly. So grid trading, for example, I've seen some fantastic results with grid trading. However, you can see from the equity curves of those EAs or the algos or the bots or whatever, that they do almost 100% of the time have massive drawdowns at some point. And that's just the nature. That's just the, it's just the way it works. That's the maths behind it. So yeah, anyway, I'm late. No problem. I've just rewind. You can watch it from the start if you're late. I don't think there's a problem. So Aussie yen is bullish. I was buying Aussie yen at one point and then closed the position basically at break even. Just wasn't super comfortable with the idea. However, I'm kind of regretting that decision now, so I might look to get back into this market on the next pullback. So we are looking at the Bank of Japan possibly hiking rates in December. If not December, then early 2026. That's currently where I'm standing. So I'm not looking to get heavily involved in yen pairs, so things like Aussie yen, dollar yen, etc. However, I do think short term we could continue to drift higher. So I'm just concerned about the possibility or the likelihood that we have the intervention or a Ministry of Finance intervention this week. I'm not saying that's going to happen. It's just something that I'm a little bit concerned about, because we discussed it yesterday, that the way the MOF work historically is they will intervene during low liquidity periods. And when I say low liquidity periods, I'm not talking about liquidity sweeps and order blocks and those things. I'm talking about when markets have the least liquidity. And those periods are generally when the US is off or the US desks aren't trading. So tomorrow or the US holiday that we've got coming is a great time for them to potentially intervene. So that is a possibility. So yeah, just keep that in mind. Again, there's no guarantees. I'm not saying that's 100% fact or it's going to happen. It's just something that is a concern for me right now. Just finished watching the clown show. Yeah, I mean, I was watching it and I just couldn't help feeling like I was watching a school play or something. It's like the people were just shouting, screaming, interrupting. It's like these people are in control of a country, deciding how all of our lives work, and they can't just let each other talk. It's embarrassing. Anyway, I'm not going to go into that. Am I still interested in pound CAD? I am interested in pound CAD. Let's see. Is it still on the Edge Finder? It is. So we got a score of 7. I've not paid that much attention to it because I saw my entry criteria got broken. So it kind of invalidated the trade short term. The trend remains bullish as well. So pound CAD compared to things like pound Aussie, even pound Swiss actually is not as great. Yeah, the setup on pound CAD is just a little bit more tricky to try and gauge. So we could be looking at a potential reversal, basically where we are, because obviously we've got previous structure here. We've come and corrected this impulsive candle as well. So yeah, there's possible downside from here, but again, the technicals are just not the clearest for me to go in. And again, this uptrend is just a little bit off-putting for me. Loaded up with prop firms during Black Friday. Good stuff, Aaron. That's probably a good move. Tax the rich. Yeah, well, it's not as simple as that, unfortunately. UK's cooked. I think it will be okay in the long term, but that's optimistic thinking. Obviously, it's my home country. I don't want it to go and turn into a third world country, but I genuinely just don't see a realistic way for the UK to resolve the problems that it's got quickly anyway, before the markets start reacting to what I'm talking about. I just don't see how the government can amend it. I'm saying that like I'm some great analyst that's predicted something crazy. I don't mean it like that, obviously, but I just think that the UK, or the sterling specifically, is quite overvalued actually for the current situation. Yeah, exactly, Sluggy. That is basically what they've tried to do. Obviously, increase tax on luxury homes, and again, removing the two-child benefit cap, and there was a couple of other things like the public transport as well. So it's very clear that Labour's doing what Labour does, which is targeting the lower income households, which is completely fine. But again, it's not conducive to growth. Yeah, no quick fix. Exactly. And again, I'm not trying to be a doomer or anything like that, but this is just what it is. Anyway, so New Zealand yen, Euro yen, Russell silver. Silver's interesting. Let's take a look at silver. So what have we got going on here? Trend is bullish. So I think, and this is just going off rough price action theory, double top here, potential pullback to the 200, which would be lovely, potential buying opportunity, break, retest here, enter again, and then continue higher. That is ideal situation number one. However, I genuinely think, and this isn't financial advice, but I genuinely think just buying dips on silver is really the best opportunity or the best approach, and that's what I'm doing. So I bought silver. Where was it? It was roughly around here. Actually, I bought this top, had a little bit of drawdown, and now I'm pretty much in a bit of profit at the moment. But my idea and what I've got at the moment is, in fact, hold on, let me see if I can pull it up for you and actually show you the chart here. Just bear with me for a second. Where's it gone here? Sorry, I'm just doing this so I can actually show you what I'm talking about. We're not just try and explain it. So yeah, this is silver. So I've got buy limits every $2 down. Every $2 up from 40. So I've got one at 40, 42, 44, 46, 48. And I've already got an entry here as well. So it's a case really, in my opinion, of just buying silver when you can, when you see an opportunity. Because I just think silver is such a great investment. I really think it does have higher to go. Anyway, there we go. Tabs sorted out now. Let me get back on track. So yeah, what I was saying, I think silver long term is good to basically just buy and hold when you can and if you can. However, for shorter term trading, as I said, I think if we could pull back towards the 200, great opportunity to be a buyer there. If this level doesn't hold, because obviously we've got the 200 and we've got previous structure here, the next stop would then be at around 46. And again, I think that would be a great buying opportunity. So it's a case really of just seeing what levels we can buy silver at and executing low risk. If it works, we can scale in. If it doesn't work, we can buy on the next level. And that's kind of the same thought process that I've got for the indices markets as well, like Nasdaq. Unfortunately, I didn't buy Nasdaq here. Hindsight, should have done, would have been a great buy opportunity. I'm fairly sure Nick got in actually, which I'm a little bit salty, a little bit jealous. But yeah, same theory, just buying key levels. 1 minute been doing poop this week. Right, I'm going to go 2 minutes. Okay, no worries. Bash, I'll see you in a bit. Gold. Yeah, we can take a look at gold. So yeah, I mean, gold is pretty much the same as silver, although obviously gold has broken this high that we were looking at in silver. So I think if we come back down here, 200 moving average, previous structure, again, great buying opportunity there. If this level doesn't hold, then we come down towards, what would this be? 3,900. And again, pretty nice buying opportunity. If we break and retest this level, scale in again, and then look for these next highs to get met. But yeah, I think with the metals, specifically gold and silver, the approach is actually very simple. It's more just making sure your entry timing is good. But I think direction wise, it's a case of just looking to buy. And again, I'm not telling you to buy. It's not advice or anything like that. That's just my opinion. So take it with a grain of salt, do your own research. But there isn't really anything else I can say on these markets because I don't have really a bearish case at this time, especially with the Fed likely to cut rates in December. So I'm just thinking, is there anything else to go over? I've got about 10 minutes left on my segment, but I don't think there is. So gold's bullish as well, but silver is in the lead with a score of 7. So yeah, silver is a priority as far as I'm concerned. Yen pairs, as we discussed, I do think short term we can continue to drift higher, but I am just a little bit concerned with the intervention risks as well as the Bank of Japan path to normalization continuing. So that's on my mind. So yeah, staying away from yen for now at least. So it just seems like it's pound. Yeah, pound bearish and metals bullish is kind of the only thing I'm really getting at the moment. But as we've discussed, so pound yen could be an interesting one because we have an opportunity on pound yen to either be buyers or sellers. It really depends on sort of the developments. So obviously I'm bearish on the pound or the UK. And if we get the MOF intervention and we do get the Bank of Japan hiking rates, I think pound yen could be a really nice short. Now, the downside is obviously we'll pay swaps on that position. However, if we don't get those rate cuts, if we don't get the rate hikes by the Bank of Japan, and we get the intervention, bearing in mind interventions generally are very quick and they're corrected very quickly as well. So it's not a huge deal long term. It's more just I don't want to be taken out. But if I bought here, I don't want to be taken out on an intervention because there's nothing I can do about that. It's too quick. So we get the intervention and we don't get those rate hikes, and the UK remains relatively where it is. I think long positions could be quite a good idea, to be honest with you. And that, again, that would just loosen up some of that risk on the pound shorts. So if we, for example, go pound short on pound Aussie, pound CAD, pound Swiss, whatever it is, and then go long pound yen, I see that as quite a good dynamic to go with. Japanese bond market is experiencing pressure again with yields for long-term maturities reaching new highs and the yen is weakening. Yeah, exactly. So that's again the reason I do think we are going to get that intervention quite soon. The thing is, I talk about interventions quite a lot actually, but it's kind of like the top concern that I've got right now for yen pairs. And it could not happen. We could get to 2 weeks time and pound yen has rallied and I've missed the opportunity because I was hesitant. But as far, that's a risk I'm willing to take. I'm willing to lose out on a potential trade to obviously then avoid in my opinion, what is a high risk position. What determines which metal is better to trade? Well, are you referring to my opinion, or are you referring to the Edge Finder reading? So let's. I'm not sure actually. Can we? Oh yeah, we can isolate. Here we go. Let's go metals only then. So silver and gold. So what's the one difference between these two? So we've got retail positioning is more bullish for silver. Actually, you know what? Let's go to eco. Let's get rid of the sentiment and just focus on the economic here. So as you can see, gold and silver are getting exactly the same score, and all of the economic indicators are giving the same result. So you got GDP -1 for gold and silver, and so on. So the reason that the Edge Finder is giving us a different score for silver and gold is due to the retail positioning, giving silver a +2. And I think is that it? I think that's the only difference is retail positioning. And then, price action as well. I mean, there's obviously other layers. So you could look at the gold to silver ratio. There's that as well. Silver is, in my opinion, relatively undervalued. I think gold is as well. But gold, in my opinion, in terms of its value is undervalued long term, not necessarily short term. Whereas I think silver is genuinely undervalued right now. So the position I'm sitting in at the moment. Okay, sweet. So what else do we have? I don't know if there's really anything else. So I might call the stream here because again, I don't really have anything else to give you. Let's take a look at Aussie yen last, because again, that is the most bullish reading right now. So we did already look at this chart, but I think the most simple way to go is to just look for buys on pullbacks. So pullback here, great buying opportunity. Pullbacks here and here, again, great buying opportunities. But again, that intervention risk, so I'm not going to mention that again. But yeah, if we could see some sort of downturn back to the 200, I think again a buying opportunity would be quite valid. So yeah, we'll just have to see how that goes. Silver to 500. Yeah, the thing is, I was looking at or thinking about silver. I think it was yesterday, actually. It wasn't too long ago, because what I've done is I've gone long on the S&P and silver. Now, both positions are not speculative trades. They're not positions where I'm saying, okay, it's stop loss here, take profit here. They're both, well, specific. I'll tell you about the S&P first. So what I'm doing with the S&P is I'm buying it weekly. So I'm treating it more like an investment than a trade. So I bought the S&P somewhere here on Monday. I'll do the same again next Monday. Don't care what price is, and I will continue to do so. Basically just averaging in. Now, obviously, there is the aim of making money on that position over the long term. So it's like a 18 month. It could be 5 years. It doesn't really matter to me. It's a case really of just holding the trade. And the same thing with silver. So as I showed you, I'm buying silver every $2 from $40, or every $2 increment up from $40. And the idea again is obviously to make money over the long term, express my macro view, not worry about really where price is. But also the last thing is to lower the portfolio volatility. So for example, if my swing trade's going a losing streak, or if I'm trading VWAPs that I've had a really bad week, that P&L is completely majority offset by the longer term positions. And again, that just helps with Sharpe ratio. It helps with the overall health of the portfolio. So it's like a double-sided position. Does that make sense? Is looking for buys on dollar Swiss a good choice right now? Well, let's first of all take a look at what dollar Swiss is doing. I don't. Oh, here we go. That's what I wanted. Let's see. I don't think we have any real data actually. Let's add neutral. So I guess it is neutral. Yeah. So to be honest, no. We're actually getting a neutral reading. So basically flat, but the score is -2, which gives us a slightly bearish leaning angle. However, obviously if we remove positioning, it still doesn't help too much. So let's have a look at eco as well for bear with me. Let me just filter out the positioning or the sentiment. So yeah, even without sentiment, it's still a -1. So GDP is okay, retail sales negative, PPI negative, employment change is okay or positive, and then interest rates are negative for this position as well. So yeah, to be honest, long positions for me on dollar Swiss, not really convincing. Anyway, ladies and gentlemen, I am going to call it a day here. I hope you all enjoy the rest of your days. Stay safe. Don't get margin called. Thank you for joining. And the stream isn't on tomorrow and Friday, as far as I'm aware, because it's the holiday. So guys, I'll see you when I see you. Stay safe. And yeah, enjoy your weekends.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. All month long, our products are 40% off, the biggest discount of the entire year. You can get access to our trading softwares, trading community, and so much more right now on our website, a1trading.com. Make sure to subscribe for future streams, and don't forget, if you're looking to get access to free courses, prop firm discounts, and free trading tools, as well as massive discounts on all our products, head over to a1trading.com. See you next time.